All right. So we kind of went through our initial first portion a little quicker than we normally do, and it's because we wanted to get to the real topic of tonight and the crypto revolution and how that is gonna affect real estate. And we're very fortunate to have Paul. Now, Paul, I know you're out there. I'm gonna probably butcher your name, but
I'm here.
Blacquiere.
Close, pretty close.
Okay. So I'm gonna stop sharing my screen, and
Okay.
and then I'll let you queue up yours.
Sure thing.
And
Hold
then
on.
while you do that, I was reading Paul's bio, and he's the founder of Spirepoint Wealth, and he has a long history of he's obviously an entrepreneur, and then he spent a lot of time kind of learning a lot of different facets of investment, and today he's the founder of Spirepoint Wealth, like I mentioned, and a financial education company that's dedicated to helping people improve their finances, create more cash and cash flow, and build long-term wealth. And I guess some of the facets of wealth is real estate, and obviously now the Bitcoin and that blockchain world is a very at the forefront these days. I don't think you can go a day without hearing something about the crypto world. And even before we started today and just the chatter, Gert mentioning that El Salvador was maybe making, helping the legitimacy of crypto come to the forefront by, making it known as a currency that they recognize. So lots of exciting things there, but a lot to learn. And who better but somebody who is in the business of teaching and as a research this. So Paul, thanks so much for jumping on here with the Edmonton Real Estate Investors Association. I know that you're from out east, so it's a little later in the day for you.
That's okay.
But I'll let you take over, and thanks for coming.
All right, thanks, Ivan, and thanks to Lona. I know she's around there somewhere. She's the one who got me to come on this club meeting tonight. Lona's one of my good clients, and normally I don't do speaking engagements like this too much anymore. I used to do them quite a bit, but when she asked me to talk about crypto and real estate, I thought that's a cool topic. There's lots I can say about that. So that's why I'm on here tonight. And you mentioned El Salvador, and I just saw an article today. I think they just passed the law that makes it an official currency. It's the first country in the world, apparently, that did that. So
yeah, very cool.
It's pretty neat. Apparently 70% of their population doesn't have a bank account. So that's what it's going to address, is all those people. So anyways, can you guys hear me okay? I'm not sure with my volume level. I got a new computer and I want to make sure everything is good.
I hear you well.
Okay, good. Excellent. So again, welcome guys to tonight. My name is Paul Blacquiere, and the topic for tonight is the coming real estate crypto revolution, how crypto and blockchain will change the face of real estate forever. And I don't say that lightly. I'm going to show you a lot of different stuff tonight, basically going to give you sort of a high level view of things. And I'm going to try to explain crypto and blockchain in a very high level way. I've been on so many presentations over the years, and people that try to explain it, they get into a lot of the nitty gritty details, and it kind of loses people. So hopefully I'm not going to do that tonight. Hopefully I'm going to explain it in a way that you guys can follow, because I know not everybody's techie, right? So what I'm going to cover today, a simple explanation of those items, crypto, blockchain, and something called smart contracts, which is one of the coolest things that come along in the last few years. How to buy and sell real estate worldwide with crypto, that it's actually being done. How crypto is revolutionizing the banking industry. This is a huge thing that's coming that the banks are really worried about. Paying property taxes and bills with crypto, and more. And this is all free tonight. So, and at the end, I've got a free bonus training. If you guys want to learn a little bit more about something, you have to stay till the end for details on that. So get people to stick around tonight. So a little bit about me. My background is as a computer programmer and a tech writer. There's some pictures of me and my wife, and founder of Spirepoint.com. And in my early 20s, I became interested in personal finance, making money, saving money, building wealth. All this stuff interested me. When you're young, you want to get out there and make money and learn how people have done it before you. So I researched and I said, well, what do the rich invest in? And at the time, I looked at, and there was three things at the time. One was business, paper assets was another one, and of course, you guys are all familiar with real estate. Now, since then, I've also found commodities. They also invest in those. And the most recent addition that wealthy people are starting to get into is crypto, which is really a new asset class that has never existed before up until I think it was like 2010 or 2009, whatever year it was that Bitcoin was invented. So what is blockchain? All right, I'm going to try and make this as simple as possible because it's a really important concept to understand. It's basically a distributed public database, or kind of like an accounting ledger, if you're familiar with that, where it keeps track of all the transactions, an accounting ledger. So it's the same kind of thing, except you're talking about digital transactions, okay? And basically distributed means it's in multiple locations worldwide. So I'm gonna give you a little image on the next screen to kind of give you a visual on what this looks like. And so there's many independent computers all around the internet. And what they're doing is they're tracking a permanent history of all the transactions of everything that's going on, whether it's money being transferred or some other type of asset. And they also verify new transactions. So if something new comes along, some new money is being transferred, same thing, they go in and they verify that. Okay, so that's sort of a high level view of it. Now, because it's distributed and decentralized, which means it's not all in one place, it can't be modified by any single malicious person. So, you won't see something like, a bank staff employee or something in there hacking a database and changing something and putting a bunch of money in their bank account and taking off with it. There's a lower chance of it being hacked because of that. And there's no vulnerable centralized system, okay? So this is a really important concept to understand. And this next image is a really basic idea. Imagine each one of these dots is a computer on the internet somewhere, and they're all connected. And let's say we're talking about Bitcoin. Well, all these computers are all talking to each other, and they're basically keeping track of all the transactions going on, and they're keeping track of any new transactions that come along and verifying that they're actually legitimate. Okay, so that's sort of how it works. So if that's blockchain, what's crypto? Well, crypto is basically cryptographic or secret mathematical codes. They're also called tokens. You'll hear that term thrown around, used for different kinds of transactions. So first and most popular is Bitcoin. I think by now everybody's probably heard of Bitcoin. If not, go to Google and type in the phrase and you'll find a lot of interesting stuff. Originally, it was designed as decentralized money. Now it's more of a store of value, kind of like digital gold. And so that's what a lot of people are calling it, okay? Basically, there are cryptographic codes that are used to record transactions on that blockchain ledger, that accounting ledger that I told you about on the previous screen. And basically, these codes create a digital signature that says, yes, this transaction took place, here's what happened. So for example, if you're transferring value or whatever, okay? That's a really high level view of what crypto is, okay? So why crypto and blockchain? The old way, you had centralized banks and governments that controlled money, okay? Without a bank account, you can't send and receive funds. So for example, in El Salvador, if 70% of the people don't have bank accounts, what are they gonna do to send money to loved ones in another country, right? They've gotta find all these other weird ways to do it. And it's like us living in Canada and in North America, this is not a problem for most of us because we're used to having bank accounts. We've had them since we were young and all that. But if you're in another country where you just don't have access to that, maybe you don't have a permanent address, then you can't deal with the monetary system. So that's the old way. The new way is decentralized peer-to-peer transactions. So those two things I just showed you, the crypto part and the blockchain part, what they do is they allow people that don't know each other on different sides of the planet to transact value between each other without having to trust each other. And that's the huge thing, because in the past, you had to sort of trust the other person and make, hopefully they weren't going to make a copy of the digital thing that you sent, and of course, people make copies of digital stuff, right? So you don't have to worry about that when it comes to crypto and blockchain. Now, no banks are required and the government does not control it. You own or control a personal wallet to send or receive funds. And you can also send and receive other digital valuables. And you guys are going to see how this all applies to real estate tonight. This is sort of like a high level primer as to I need to explain this part because then the rest of it will make sense afterwards. So this combination of blockchain and crypto is really powerful. Both of these elements existed before separately. I played with them years ago in different ways. But I had never seen them put together. And I must have been asleep for all the time that Bitcoin was going on since 2010 or whatever it was, because I wasn't paying attention to it at all until late 2017 when I got on board with it. So combined, these two things form what we know of as cryptocurrencies today and other types of crypto tokens and stuff you'll see about. All right. And as I mentioned before, this is really a brand new asset class. It's like nothing that has ever existed before. So there's a third element, and this one is really cool, that pulls in blockchain and crypto together. This is called a smart contract. So what are they? The best way I can explain it, it's kind of like a built-in computer program into some of the different types of crypto or tokens that are out there. This will all make sense in just a minute. So the most popular one is called Ethereum. Now you can just buy Ethereum and hold on to it and hopefully, invest in it, that type of thing. But it has a much bigger use case underneath there. It's got these smart contracts capabilities that lets you do all kinds of incredible things with it. So here's an example smart contract that could be programmed into one of these crypto tokens. If event X happens, pay $100 to Susan. Okay, that's the kind of stuff that can be done with a crypto that has a built-in smart contract, and not all of them do. This is very powerful for transactions with specific requirements. Now, do you guys know any transactions that have specific requirements? Maybe real estate, right? There's a lot of them out there. Real estate is just one. There's a lot of stuff that goes on. So how will this all affect it? Now, there's technology that's coming that will disrupt everything. Some of it's already here. So from some examples, and I'm just going to fire them off here, and then we're going to get into some more details. Property purchases and sale, mortgages, loans, property management, leasing, land titles and land registry. This is just a big centralized database that could be decentralized. Closings, when you're purchasing it, the actual closing, the title transfers, all the stuff around that. Rental agreements, rental payments, bill payments, and more. So I've seen all kinds of technology that's looking at disrupting all of these categories of real estate. So if you're in one of these industries, it would be good to know about some of the stuff that's coming or that's already here in some form. All right. So let's take a look at buying and selling property. So take a look at this. This is from the Wall Street Journal. Now, this article was from 2017. That's like almost 3.5, 4 years ago. Okay. And so basically there was a startup company called Proppy, I think you pronounce it. They're still around. They still got a website. And basically they were able to conduct a transaction in which a cryptocurrency, they were able to buy an apartment in Ukraine, and the title was registered on a cyber ledger. Okay. And the person who was buying it paid $60,000 for the apartment. Okay. So this is an example where they used a cryptocurrency and they registered it on one of these blockchain type ledgers, these cyber ledgers. Cyber ledger is not really a term that's used. This is whoever wrote the article just kind of coined that. Usually it's some sort of blockchain. You'll hear that term thrown around a lot. Okay. Here's another one. This one was from January 2018. So Green Bay Packers fans will love the location, but the 1,000 square foot property was recently assessed at $264,000. It was $1 million house at the time, and it was being sold on the blockchain, again through Proppy. And let's take a look at the pictures here. So the reason it's so expensive is because it's right near a stadium. So whoever is a fan would probably want to buy that place. And take a look at this. So basically, Proppy has tailored the smart contract framework previously used for its Ukrainian deal to comply with U.S. and state laws. Okay, and then basically they were able to do the transaction. But as it stands now, so this was 2018, the transaction was made without loans, so no bank loans. Because right now there's no lender. At the time, there was no lenders that were doing that kind of stuff. but they said here, there are crypto banks that are evolving that can provide the financing. Okay, so this was just a hint back in 2018 as to what was coming. Okay, now what about Canada? Well, there's actually already brokerages listing properties in Bitcoin. So here's one, bithome.ca. It's a brokerage, been around for a while, and take a look at this. They've got listings on here, and I don't really see a normal price on here, but what I do see is Bitcoin. So what they've done is they've set up their site so that properties are listed in Bitcoin. And this, I'm willing to guess that this property is also listed on the MLS and their more traditional sites to find other buyers. But they're basically trying to attract the tech savvy people interested in Bitcoin or who have a lot of Bitcoin and are thinking about buying property and they want to use their Bitcoin to do it. Okay, so I thought that was pretty neat. Here's another one. This was just this year, March 27th, 2021. Okanagan man trading home for Bitcoin in red hot real estate market. So I don't know if you can see all the parts of the article here. He says he decided to put up his house for sale. He wanted to do it in a way that's radical. So he wanted to do some neat stuff. He believes in technology so much. And he's an early adopter. He wants to be rewarded for that. So for 12 and a quarter Bitcoins, the house can be yours. And you can see they were dealt with through, a realtor in Kelowna. And basically, it's just another transaction that was being done. Now, you might be thinking, well, okay, so if I'm selling my house for crypto, well, what happens if the crypto market crashes? All right, so I've just got a whole bunch of Bitcoin and all of a sudden the market crashes. What am I going to do? Because the price of Bitcoin and Ethereum and other crypto, it's pretty volatile, as you guys, anybody who's ever followed it knows it goes up and down 10% in a day pretty easily. 30% drops, that's a pretty big correction, but they do happen. All right, so what do? How do you protect yourself? So if you want to keep it in crypto, what you can do is convert Bitcoin and Ethereum and other crypto into something called a stable coin. All right, so unlike Bitcoin, which goes up and down based on the market value of whatever people feel like it's worth that day, there are coins out there that have mostly stable prices, and the variations are very, very tiny in comparison to the other types of crypto. So for example, there's one called USDC. This one's created by Coinbase. You guys may have heard of Coinbase. They're probably the biggest crypto exchange in the USA. And basically, it has a stable value in US dollars. Okay, so if you're an American, for example, you could hold it in that and you would not see changes to the value of the crypto that you had because you had converted your Bitcoin at the time you received it. Bam, it's into stable coin and it's just stuck at that US dollar price. It's pegged at that. There's other ones as well. USDT is one. It's called Tether. Be careful with this one. There's some kind of weird stuff goes on behind the scenes on this one. And there's others too. You'll see them floating around when you start researching this. But I just wanted to show you that, some people might think, well, crypto's so volatile. How could it ever be used for any kind of legitimate transaction? And the fact that there are stable coins out there shows that it's possible. Okay, you can convert that crypto into a stable coin and it stays at the current value. So buying and selling property today with Bitcoin or whatever type of crypto, it's starting to be used, but it's still very, very early. The most common scenario is buy the property with crypto. There's no mortgage, and the crypto is converted to cash, and the cash is paid to the seller. Okay, you notice there's no bank involved here because it'll get totally messy at that point. Now, the transaction's also recorded in the normal land titles and land registry systems because the stuff that I've seen, there are experiments and trials being done with land registries and with all aspects of real estate. But again, it's very, very early. But I wanted to plant the seeds and show you guys what is coming down the road. And still right now, a lawyer or a notary or a title company handles the closing on it. All right. So the downsides with this is that there's no mortgage financing. The banks want proof of cash funds. They don't want to see, your crypto balance in your phone or something as your proof of, down payment, that type of stuff. And lawyers might also have trust account issues with crypto as well. So that's something that all these types of things have to be resolved over time before this becomes a mainstream. But even if, out of everything I show you today, even if only 10% gets applied to our day-to-day life for real estate and other things, it's still a very major disruption to the industry. Okay, so here's what I see it potentially like in the future with buying and selling property. Potential scenario. So you decide to buy property with crypto. A crypto bank offers a crypto mortgage. The crypto is held in trust and paid out by smart contract. Notice there's no lawyer here. Crypto is paid to the seller on closing. The transactions are recorded on a distributed blockchain. Remember that database ledger? And notice there's no lawyer, no notary, no title companies. They're completely eliminated. So can you guys see why this technology is really revolutionary, right? And most of the people in the real estate industry have no idea this is coming because they're not even looking at crypto. They're certainly, if they are, they're just thinking of it as an investment, like Bitcoin, buying it on their phone, and not really some of the other more detailed stuff that's going on behind the scenes. But it gets better than this. So let's look at fractional ownership. So imagine you want to sell your $1 million rental, and instead of one cash buyer, you find 3 crypto buyers. Each of them could own a third of the property. Each could contribute a third of the down payment in crypto. A crypto bank could offer a joint mortgage. Distributed blockchain records show 3 owners, and that's public record. Right, so forget having to pay the land titles to go and do a title search. If you guys ever done that, you got to pay whatever it is, $10, $15. Do a title search. You can do it from your computer, from anywhere. And smart contracts automatically split the rent 3 ways in crypto, and automatically split the bills 3 ways. Okay, this technology is coming, and in some cases, it's already here. So here's an example. There's a company that I just found, actually, Realtor, I think they're called. For the first time, investors around the globe can buy into the US real estate market through fully compliant fractional tokenized ownership powered by blockchain. All right, so here's an example. I haven't looked at all their projects. You can see, obviously, these were all sold out. Here's a new project that's selling. It doesn't look like a very, very large scale project, but that's okay. Take a look at the minimum investment. $54.95. Very good yield. And guess what? Their investors can be anywhere in the world because they're buying, in this case, I believe they're buying token ownership in this. So take a look at this little diagram down here. The tenant pays in US dollars to the property management company. And then the property management company, which is probably whatever the name of the company was, Realty, I think it was, they send a US dollar token, probably it's like a stable coin, to real token owners. So the people that own token ownership in this, they own it's like a special crypto that gives them an ownership share in this property. All right, so they receive this US dollar token, and then basically they get to put it in their bank account, or they can probably put it on their phone or whatever. Okay, pretty cool stuff that is already here in some form. Global fractional ownership. So here's another scenario that's possible. You could create your own crypto token. Now, if you've never done any kind of crypto stuff before, you might think, boy, that sounds hard. Well, I know that there are platforms coming out that are making it easy for almost anyone to make their own token. You just like type in a name and do a few things, and bam, you've got your own token ready to go. So all this stuff is going to get easier and easier to use. So you create your own crypto token. And what if you sell that token to hundreds or thousands of people? They could be anywhere in the world. And then you take the funds you receive and you buy real estate with those funds. And now those token holders, they own a fraction of a real estate deal. Okay, and maybe you pay out a percentage of net income to token holders. And if the token holder wants out, they sell tokens on an exchange. Okay, so what are the benefits here? Well, simplicity, there's no contracts, no lawyers. Transparency, ownership details are public. Okay, a small investment, you guys saw, I think it was Realty, they had as low as $50. You could invest in a big, it was a property, right? You could be in another country, and if you could buy those tokens, you could get in for $50. I mean, that doesn't sound like a lot to us, but if you're in El Salvador or you're in another country, imagine the hundreds and hundreds of millions of people around the world that can now not only get their own banking because now they got a smartphone, or any kind of phone that has a crypto wallet on it, now they can invest in property. They probably don't even own property, but now they can invest in it on a very small scale. So this is really powerful for them. And it's also powerful for you guys if you're looking at raising money over time, because you basically now you've opened up your scope to the whole world. And it's a small investment. Liquidity as well. You can sell the token back to the syndicator. So in this case, like Realty, for example, you could sell your token on a centralized exchange. Now, this requires that the exchange actually support your token. It's kind of like a stock exchange. They don't have all the stocks that are available. They only list certain ones. Well, certain exchanges in crypto do the same thing. They only list certain crypto tokens. Okay. But what's really cool is there is something called a decentralized exchange. This is where there is no centralized party that's saying yes or no to the tokens. All it takes is two people somewhere in the world, and they can use a decentralized exchange, and they can exchange these tokens for each other. So now, if you think about trying to buy an investment share in an existing property, as you as an investor, you're going to put money in the past, liquidity could be a real problem. Like if you want it out and there was 10 other investors, you would maybe hope that one of them would buy you out, or that now you got to find somebody outside of the deal to come in and take your share over, right? So if you have a decentralized exchange and there's a market for those tokens, now it could be as easy as selling it in just a few minutes. Okay, it's pretty cool. Another angle this could be done from raising capital. So what if you just want the money? You want to raise the money and you don't want any co-owners. You don't want to pay a percentage. Again, you could create your own crypto token, sell the tokens to hundreds or thousands to raise funds, buy real estate with those funds, and then maybe you pay the token holders a flat interest rate, almost like a bond or a loan, something like that. Okay, that's possible too. All right, let's look at changing the banking industry. So do you need a bank account for crypto? No, no bank account is required. You can use personal wallets instead on your phone. So that's what I was talking about before, like for the example with El Salvador. If that many people don't have bank accounts, if they've got a phone that has a wallet on it, a crypto wallet, now they can transact. And now they're going to be able to use Bitcoin. I just read the article today that said that the president or whatever said that if the business can accept Bitcoin, they must accept Bitcoin from somebody coming in to pay with Bitcoin. Centralized exchanges and wallets are also common. So you'll see this, like, for example, the Coinbases of the world, where there's a big exchange, they list a bunch of coins, and then they let people come and then buy and sell the coins on their exchange. Now, what about, do you need a bank for a loan? Not if you own crypto. This is something that is probably, most people don't even know is possible. If you own crypto, there's something called decentralized finance, or DeFi. This is a really hot trend in 2020. I think it's still going to be a really hot trend going forward. It was just hot in the sense that the tokens were going crazy last year for this particular market. If you own crypto, you can tap into the value of that crypto for a loan in other crypto, so that you don't have to sell it. Because when you sell it, then you have to deal with taxes and capital gains and all that stuff. So the way you can avoid that is basically taking a loan against it, because you guys know loans aren't taxable. And in this case, smart contracts control the interest payments. So remember, it's that little computer program built into the crypto. It handles interest payments going to and from whoever, wherever the money's coming from, wherever the crypto's coming from, and who it's going to, and what happens if somebody defaults or the value drops too much, and so on. Okay. And in the future, see, I'm talking right now about loans against existing crypto, but you're going to see some smart people are going to figure out a way to offer loans on other types of assets. This stuff is coming. So centralized exchanges, most common are these exchanges. They require something called KYC, know your client. Anybody that's a mortgage broker knows all about this stuff. Banks ask questions for large crypto to cash transactions. So if you're cashing out, or you're taking a lot of cash and you're putting it into crypto, they may ask questions. And they may even block some transactions. So for example, if you're trying to do it on a credit card or whatever, they're being banks, right? They're ultra conservative. That's what they do. They want to protect their profit, and they don't have any risk. So decentralized exchanges, there's no single central authority helping people exchange the crypto. You're exchanging directly with others worldwide. It's facilitated by software and smart contracts. As you can imagine, governments, central banks, and banks all around the world are worried about this technology. And that's why you'll see central bankers and governments, sometimes they'll be bashing Bitcoin. You'll hear them talking about it on the news. Oh, it's junk or whatever. There's no value behind it because they don't want people going towards it because it's a real threat to currencies all around the world, Canada, US, everywhere. So what about paying bills? Don't you need a bank to pay bills? Well, for now, yes, you do. But many companies are starting to accept crypto. You can even pay municipal taxes in crypto in some places. Here's one for Innisfil, property taxes. You can pay with Bitcoin. And the way it's done is that they've got some sort of Bitcoin payment processor behind the scenes that converts the crypto into cash for the city. Now, that's the way it is for now. In the future, maybe the city will be holding a portion of their cash reserves as crypto because they want to hedge against inflation or something like that, which I'll talk about shortly. So here's another one. Oops, I didn't do the animations properly. And this was an article behind here in Global News. Paying office rent using Bitcoin, Calgary may lead the way. This was an article, it was a few years ago. There was an owner of a office building that was accepting rent in Bitcoin. And then here is a service called Bills that I just discovered. Basically, you can pay your bills with Bitcoin. You can buy and sell, of course, and they have all kinds of different bills in here that you can set up. Okay, so if you happen to have a lot of Bitcoin, then you can pay your bills with it if you want. Right, so this technology, like I see a lot of this stuff as being very, very early stuff. Like 10 years from now, who knows exactly what's going to be in place, but by seeing what they're experimenting with, it's going to give you a hint as to what's coming. What about collecting rents? So what if you want payment in crypto? Well, that's pretty easy. You can just give your tenants a receiving address. So when you've got crypto, like Bitcoin, for example, if I wanted to send Bitcoin to Ivan, I just need the receiving address for his phone or his desktop wallet or his Coinbase account or whatever it is. And I can send him $100 or whatever to his address. So basically the tenant, in this case, pretend I'm the tenant, I would send the crypto directly to your wallet, okay? And it completely bypasses the banks. Like, there's no bank involved there. It's just me. I send it directly to you. And on a good day, it'll show up in a few minutes. On a long day, it might take a few hours to show up. Depends on how busy the Bitcoin network is. There are other cryptos I've used. I swear it's within 5 seconds. It shows up and you can be anywhere in the world. And I think one time I did it, it was like 2 seconds. It was unbelievably fast. Okay, so the banks have nothing on this in terms of speed, right? You guys have been, how long have you been waiting for an e-transfer to go through? Like, come on, it's supposed to be instant. I gotta wait 2 hours. Like some of the stuff with crypto that they've got out there already is just amazing. So anyway, so back to this. So you give the tenant a receiving address, the tenant sends crypto directly to your wallet, and then you receive it and you just hold on to it. You got your wallet, you're looking at it. Okay, I got it. And you can hold it, wait, hopefully it goes up in value or whatever, or you could cash it out anytime, right? So what if you want Canadian dollars without worrying about crypto prices? So here's how you could tap into a younger market segment that maybe they've got some crypto and they want to pay the rent, but they haven't got paid, but they got some crypto, and you can tell them, hey, I accept crypto, right? And so you can give them an address. Well, you'll see here. So basically, you set a Canadian dollar price, and you need to send a special type of invoice here, and the tenant's crypto amount changes in real time. I'll show you a service that does this, and then you get paid in Canadian dollars. So your amount doesn't change. So if it's $1,000 they owe you, that's what you get. And basically it's their crypto amount that varies based on the price fluctuations that are going on in the crypto market for that coin. Okay. So Coinberry, this was a neat one that I found. Start accepting crypto hassle-free, avoid all price volatility and risks, send invoices by email or SMS. easy accounting and tax reporting tools, accept payments directly from your website. Okay, so it looks like they've been using it for merchants, charities, municipalities, and individuals looking to accept cryptocurrency payments, donations, and tips. Okay, pretty neat. Here's another one I found. It looks a little more complicated. I don't know if it is, but this is another example, Blockonomics. You can see create and send Bitcoin invoices. Okay, if you're wondering what this funny looking code is, this is often what you'll see as, it's a special type of code. It's called a QR code, and it's used to quickly scan into your phone using your camera, the address that you want to send things to. That's what you'll see this if you start digging into the whole crypto industry. All right, so protecting your cash reserves. So you guys are real estate investors. You know how important it is to have some cash on the side in case the roof maybe decides to cave in, or whatever. A tenant moves out and decides to trash your apartment. You got to fix it up. So you've got some cash reserves, and you're concerned about government spending. I don't know if you guys have noticed over the last year and a half or so, government spending is becoming a real problem. Here's an article. I think this was the Financial Post. I clipped off the top part. But basically, Canada has been going nuts with money printing. The Bank of Canada, I think it was like $400 billion in money that the Bank of Canada used to buy bonds from various corporations that were trying to sell their bonds into the market, and nobody was buying them. So the bank stepped in and bought them. Guess who's paying for all of those bills that are now flowing around? All of us as taxpayers. So when you see governments printing money, like adding 50% to the money supply in a year, that's more dollars chasing the same goods and services, including real estate. Now, it might seem like your properties are going up in value at times. It's hard to tell because when there's that much more dollars chasing it, like it can just be a matter of government printing that is causing that inflation. It's not a solid, legitimate inflation. It's kind of a scary thing because it means everything goes up in value, but that means your cash goes down in value. It's worth less. Okay. Here's another headline. This is it says investors now fear inflation and the Fed more than COVID. Bank of America survey shows. I'm going to show you a little bit of details on this. This was pretty concerning when I saw this. This is why I'm bringing this up in this particular presentation. So I put the headline here, hyperinflation. So this was from a Bank of America report just recently that basically, this was one of the charts that they had published in this report. It was buried in there. And you can see the headline here. It says mentions of the word inflation on earnings calls jumped 800%, pointed to higher inflation. Okay, so this year it went absolutely nuts. And now this part, I don't know why they put these words in here. Take a look. So, the headline here, inflation trends running hot as margins hit record highs. And then down here it says, on an absolute basis, mentions skyrocketed to near record highs from 2011, pointing to, at the very least, transitory hyperinflation ahead. I don't know about you, but the words hyperinflation don't sound very good to me. I don't think it's good for any country. You guys may have seen it in the cost of, maybe lumber or any other things that you've been trying to buy. That's from the money printing. I tried to find the statistic for this presentation. I know I've seen it. It's in the US, for example, they increased their money supply in the last year between 30 and 40%. So imagine all the money they had before, and now they added an extra 30 to 40% of the money on. So that's more dollars chasing all the same goods and services. So that's what I mean by protecting your cash reserves, because if you're just sitting on cash, it's slowly going down in value. And then when the banks print money, it goes down in value, big chunks. It takes time for that to percolate through the economy, but it's coming. Now, crypto can help. Government currency is inflationary. The central banks can just keep printing money as much as they want. And if you guys want to dig into this, you can look for the terms quantitative easing. I think they use those words because people don't understand it. If they said we were printing money, people would be up in arms over it. But they use the term quantitative easing to mean that. And so more money in circulation is equal to higher cost of goods, all goods and services. It basically steals money from everybody. Okay. Now, some crypto can help protect cash reserves. So for example, Bitcoin can only ever have 21 million coins. A very large percentage of those are already snapped up by people who have no plans on selling them anytime soon. There's also many that are lost. I don't know, you guys have probably seen it in the news over the years. You know, some guy was mining Bitcoin way back 5-6 years ago, and he lost his hard drive, and it was like 5,000 Bitcoin or something crazy, and he lost like $500 million or so. It was just crazy amounts of money. I can't imagine people doing that, but it happens. So there's a lot of Bitcoins that are lost, and they'll never be found. They're in garbage dumps. I heard of one guy, he was trying to pay the municipality, split the profits if they let him dig up the garbage in a garbage dump to go find his hard drive that he had thrown away by mistake. So anyways, Bitcoin is really, there's not a lot of it. It might seem like there is, but it's going to get to the point where the people who have it aren't selling it, and the remaining ones are going to take off. Large corporations this year has seen large companies want to protect their cash, hedge their cash positions with Bitcoin. And you guys have seen this already. MicroStrategy is a huge buyer of Bitcoin. Tesla as well. Despite the fact that they've stopped accepting Bitcoin for their Teslas, as far as I know, both Elon Musk and Tesla still own large Bitcoin positions. And they're doing it because they know the governments are basically printing money. So now be careful. Some crypto is inflationary. That means you might buy a coin thinking, great, I'm protected. But then the people that run the coin are just making more coins. You don't want a coin like that. Something like Bitcoin is good because it can only ever have this 21 million. Now, there's a lot of stuff I've shared tonight. And if you don't think this is going to happen anytime soon, well, in many cases, the technology is already here. I've shown you some examples. And remember, humans think in linear terms. So we always think that, change is incremental. It's always, going to be this slow progress going forward. But that's not the way technology works. Technology advances exponentially. So what seems like, oh, that's kind of cute or interesting now, 5 years from now, it could completely decimate a certain type of market. Maybe, I don't know, legal closings or something. I don't know. All right. Very interesting book on this. If you want to do some reading, is The Price of Tomorrow by Jeff Booth. I got this a few months back. Very cool book. And he actually thinks deflation is coming because of technology. But I think if all the central banks keep printing money, they're kind of battling. The central banks want to inflate the money supply and create inflation, and technology by definition makes deflation. So read his book if you're interested in that. It's a very cool topic. So here's something to think about. Remember these businesses disrupted by technology: Blockbuster, Kodak, Borders, that bookstore that was a competitor to Chapters, Toys R Us. Remember the Palm that made the Palm Pilot? All right, maybe some of you had it. I had one. Technology changes fast. So these companies that we see today can be gone tomorrow, even in not just the tech space, but outside of the tech space. Okay, so that is it. So next steps, I recommend get some education about crypto for yourself. Look for disruption. Just now that you know that there's some things coming down the road, you don't know exactly what it's going to be because it's all in flux and they're experimenting and they're trying stuff out with governments and companies and all that. Just know that something's coming and keep your eyes open for it. Okay. And I've also created a free video just for you guys. I just did it yesterday. I've included a free bonus training with this, how to buy and sell Bitcoin and other crypto in Canada. It's about a 17-minute video or so. And you can go to spirepoint.com/EREIA, so Edmonton, REIA, and then crypto. I checked that link. That should work. And you go there and you enter your email and you can get the free video that's in there. Okay. And I've also included in that video, I talk about 2 Canadian exchanges that I like that let you buy crypto. And one of them has a couple of them available, and another one has many, I think it's 10 or 12 different ones you can buy. And also I talk about how to figure the best price, make sure you're getting the best price on it as well, and sort of how these exchanges make money. I explained how it's done in there so that you can try and get the best price whenever you're going to buy it. Okay. Or just when you're going to do your transactions and stuff. So check that out. And that is it for my presentation. So if you guys have any questions, now is your chance.
There was lots of questions out there. So
oh yeah, I wasn't even looking at the chat box.
Yeah. All right, who's first?
Do you want me to read some of them, or do you want? I didn't catch if there were. No, let's see here. Oh yeah, I have to go back a bit. Oh boy, there's a whole bunch of stuff. You weren't kidding. Wow.
Yeah.
Okay. Let me go. I'm scrolling. I'm still scrolling. Hold on. Okay. More questions. Session was.
You opened a can of worms.
Yeah, sorry about that. Wasn't me. The can has been opened a long time ago. I just discovered the can. I showed you guys the can of worms.
Bitworm.
All right. So El Salvador. Okay, we talked about that. Some comments here. I was just reading some stuff from Linda. She's attending an event. Oh, okay. Wendy's saying, I've heard some customers using various crypto platforms or wallets having great difficulty getting their crypto released back to them, or sometimes it just disappears. Lack of knowledge has held me back from participating. This is one of the things I touch on in the little training video I give here. If you're dealing with small amounts of money, $100 or whatever, and you lose it, or like, it doesn't really matter. But if you've got a few $1,000s and you want to protect it, do not leave it on any exchange. The only exception I might consider is Coinbase, but Coinbase doesn't work well for Canadians. We can't cash out to Canadian dollars. That's why I don't recommend them as a Canadian exchange. I have an account there, but just because they're so big, and I think they have insurance and things like that. But even then, who wants, if any centralized exchange can get hacked by a hacker, okay? And if that happens, you could lose some of your crypto. So that's why I say, if you're going to buy it, take it off the exchange, put it on your phone, get a different type of wallet. And then when you start researching, you'll see other kinds of information about these wallets, but do not leave it on an exchange. So that's probably what you've heard about, Wendy. I know I was on an exchange, it was a few years ago, called Quadriga CX a few years ago. I'd left a little bit of cash sitting there, and the whole thing went bankrupt. And so I'm still in the bankruptcy proceedings as a creditor. It's like the third or fourth time in my life I've been a creditor in a bankruptcy. It's kind of bizarre. Yeah, so just protect yourself, get your crypto off the exchange, and then you don't have to worry about that. And just keep it safe on a phone. If you're worried about someone getting your phone, take an old phone, put the crypto on it, and just put it in the closet and leave it there. Let's see here. Okay, so Julia said Bitcoin's too volatile. I did talk about an option for that to help protect it. Stable coins can be really helpful. Let's see. Exact time of the contract. I'm assuming you're talking about smart contracts, Wendy. Yes, they can be very specific. So as specific as a computer can be, a smart contract can be just as specific. Okay. I love no banks and no government involved. Yay. Yeah. Some of them are a little concerned about that. Clayton's mentioning TCAD. I think that's a stable coin, but it has limited exposure on exchanges. Yeah, there's a few stable coins out there. I'd recommend stick with the big ones, like the Coinbase one, USDC. Again, I'm not going to recommend you guys buy anything particular. This is not about investment advice. I'm just showing you guys what I've done and teaching you a little bit about it. Any decisions you make are your own, basically, on that. But I recommend some of those more obscure coins, even the more obscure stable coins, to stay away from them. This is just my recommendation. Let's see here. How does the volatility affect the tax amount you have to pay at the end, since it's not stable as the dollar? So that's a taxation of crypto is a big discussion. Basically, CRA treats it as kind of like property, not real estate property, but basically all the capital gains rules and stuff apply. So when there's no tax implications to buy crypto and hold it, even if it goes up and down in value. There are tax implications when you sell it. Okay, so I'll just leave it at that. Let's see here. Yeah, Wendy's asking about making a token, but how to get people interested to buy it. Yeah, I'm planting seeds as to what's possible. There are lots of coins out there, tokens that they just make them and they don't even have anything of value behind them, and they go out and promote them and make millions of dollars doing it. So I don't know if you come along with you're offering interest payment or some kind of income for people, you could stand above the crowd, but that's something for you to dig into. Saying it's about time we got rid of the greedy banks, cut them out of the business. Well, actually, that's a little interesting thing. If what was it, the central banks? What's the World Bank there? Is it the World Bank? There's another one there. I can't remember what it's called.
IMF.
They're looking. What's that?
The IMF.
Yes, thank you. Last I heard, they're looking at trying to make a world. What do they call it? It's a central bank digital currency, I think, that all the central banks will use. So basically, they're trying to control that. So imagine if all the banks that you deal with today didn't even have to be used because your money came directly from the Bank of Canada to your account through a crypto token that they've created. And they're
going to use XRP for the ODL, right?
Who knows what they're going to use going forward. But I'm just planting the seeds here. Some of the stuff that's being talked about and being experimented with is really, really incredible here. So let's see. I'm just going to keep going, try and get through as many of these as I can. The SEC is still trying to regulation with these tokens. Yeah, the SEC is being more strict than Canada and other countries. So who knows what they're going to do. JP Morgan Bank is making their own. I'm assuming you're talking about crypto. Amazon is making their own. Yeah, there's lots of companies experimenting with this stuff. Remember a few years ago, even Facebook was talking about making Libra coin until there was a big uproar and the regulators were coming down on them. They didn't want the biggest social media company on the planet to become a bank. That's not a good combination. So yeah, let's see here. To be more info for new. Yeah, there needs to be more info for new investors so less people get scammed. Yeah. I mean, the whole topic of protecting yourself in the crypto space, I could go on for a few hours on it just to help protect you. So you really got to do a little bit of research, but as long as you, it's like protecting your inbox with your computer with antivirus and not clicking on strange links that people send you. Just those steps alone will go a long way to protect you from crypto scams, because you'll see them. They'll start coming to your inbox, trying to get you to click and then enter in secret codes, and all of a sudden you've lost your crypto, right? So you don't want that. So, if you're not a techie person, then maybe keep your money on an exchange, but don't make it a lot of money, because if the exchange goes under, again, you've lost it. So I don't know what other solution there is other than to learn a little bit of tech stuff. Let's see here. Alan's asking, is there any record of each transaction? In other words, does it keep records for me? So there is every blockchain so every cryptocurrency out there has most of them have their own blockchain. Some of them ride on top of others, but all the transactions that are done, like Bitcoin, you can see every transaction back to the beginning of time when it started. It's not a record keeping thing. It's not like for your taxes or your bookkeeping. So that's a different thing. Yeah, Yulia's talking about gas fees. Yeah, I mean that's a bit too much to get into today. There's fees involved with sending crypto at times. That's just part of it, but it's a lot cheaper, for example, to send certain types of crypto around the world than to send a wire transfer or go to Western Union. Okay. Wendy's saying I went out of cash, either gold, silver, or crypto. Yeah, pretty good. Or real estate. Yeah. Let's see. Sorry, there's lots of stuff here. I'm trying to find some. How do you protect yourself from losing your Bitcoin? For example, losing your cell phone. Again, a bit too much to go into today, but just understand that if you lose your cell phone, you haven't necessarily lost your Bitcoin. Every time you set up your own wallet, like your own personal wallet, not on an exchange, but like on a phone or whatever, you're going to get a set of, it's kind of like a backup set of passwords, 12 to 24 words. And you have to write those words down and keep them somewhere safe. You don't show them to anybody, because anybody who has those words can steal your money. Okay, but that means if you lose your phone, you still have the words and you can restore your wallet. So that's how it works. So there's sort of a backup there that's available. Yeah, Elon Musk, Wendy, has been doing some really bizarre things. I love what he's done in business. I don't love what he's doing in crypto. He's playing games and causing all sorts of weird things with his tweets. But, it's a free world. He can do what he wants. Let's see here. Lots of stuff doesn't. Can you talk about the accredited investor requirement in these deals? That's something you'd have to research for your particular situation. I mean, if you're in Canada, you guys probably already know the rules for that if you're raising any kind of capital. But if you're going international, I don't know if like Ontario rules would apply. I don't know. Wendy's a chatty one. She says, sorry, so many questions. Let's see. She's talking about doing her own token. Wong saying, great presentation, Paul. Thank you. I'm glad you enjoyed it. Sorry, Wendy, I'm trying to get through to some other questions. I see you got a lot of comments here. Okay, hold on. I'm at the end. This is good. Okay. Is there investment groups that have crypto investment portfolios? You can actually buy crypto in your TFSA and your RRSP now. There are some ETFs now available in Canada. I cannot remember off the top of my head what they are, but there are some available in Canada. I think there was a fund before that, but they quickly switched to ETF form, which obviously has a lot lower fees than an investment fund. So if you're worried about losing your crypto, there's an option. If you want to get into crypto, you could buy it through one of these ETFs. Now, it's not necessarily that you're actually buying the crypto, you're getting exposure to the price of it, which for most people would be good enough. If you're just looking to gamble on the price and hopefully it goes up, well, that might be a good option for you. Ange asks an interesting question. What makes storing crypto in the wallet safer than an exchange? How does crypto disappear in the exchange? Okay, so imagine you're an exchange like Coinbase, for example. They have billions and billions of dollars of crypto probably sitting there. So the way crypto works is that, you remember I talked about that there's the crypto part of cryptocurrency is those secret codes. Well, those codes are kind of like a key that unlocks sending the value of a certain amount of crypto to another address. So Coinbase has a lot of these keys sitting around. Well, they're not sitting around, they're being well protected. Okay. So what happens is you'll get hackers that somehow, it's not as likely they penetrate computer systems, but maybe they'll do some social engineering. They'll get somebody to reveal some information or a password, and they'll somehow get into a system. And all they need to do is get access to certain digital keys that are part of Bitcoin or Ethereum or one of these other cryptos. And once they have that, it's like a key, they can unlock it and it can send the value out and they can steal it. This is how it's done. Okay. So why is your own wallet safer than an exchange? It's easy. An exchange is a big, huge target with a lot of money, a lot of crypto. And because crypto transactions are not reversible, so there's no bank to call and say, hey, someone took my money, can you reverse it? Once those hackers get in and they've stolen it, the only way they get caught is if a government tracks them down, right? So that does happen, by the way. But basically, the crypto exchange can lose all that crypto, and it's happened before. Maybe they don't lose it all, but they lose a lot. So now when it comes to you with your wallet, what are the chances you think a hacker is going to know, for example, to start, that you have a whole bunch of crypto on your wallet, and then know where you keep it, and how to get in and to get access to it? It's much smaller, and they're not going to go for like small fish like you, for example, that have a small amount compared to millions of dollars sitting on an exchange. So hopefully that makes sense. How does the exchange work between Bitcoin and other cryptos, or do you have to stay within one coin? No, you can trade between them. Exchanges will let you switch between them, either a centralized exchange or a decentralized exchange. The training video I show you how to do it with a centralized exchange. There's 2 of them. Wendy's saying, you for explaining for how to store the 12 to 24 words to access the wallet from anywhere. It's all about accessing the wallet, not the platform. Yeah, so those words that when you set up a personal wallet on your phone or your computer, those words, you're going to get some backup seed words, they're called, and you want to make sure you protect those. Don't show them to anyone. Definitely not your kids if you think they might take your money. So can you please comment on NFTs? That's a whole other topic. Do you think they will tie with real estate in the future? It's possible. NFTs are like another type of crypto, but what they do is whereas Bitcoin, you can buy any different Bitcoin and they're all the same. NFTs can be tied to very specific things. So for example, you could get a crypto token that says, I attended this webinar tonight, and it's on a blockchain, and only the people that were on this webinar could have a little token with could have a little graphic, and it could say like, hey, I was on this webinar tonight and learned about crypto. Nobody else could ever get those because only the people that were here could get them. Okay, so they're not, they're unique in a sense. Okay, so that's about all I'm going to say about NFTs because it's really a huge topic all on its own. All right, exchanges can be taxable, yes. What if you're traveling in a remote region where no internet connection? Can you still transfer your crypto to a person who also has a crypto wallet? You do need internet, but only for the point that you do the actual transaction to move the crypto. Other than that, you can be offline. And in fact, that's a good idea. If you're worried about someone, or you got an old phone that you want to put your crypto on, and you're worried about somebody somehow getting access to it, just put it in the closet, turn it off, leave it there. Okay. Kyle's saying, thank you so much, Paul. Great presentation. I'm looking forward to your training. Hey, thank you. I'm glad you enjoyed it. Another one, Wendy saying, thank you so much. And I very much appreciate your knowledge in today's presentation. You guys are very welcome. And more thanks. Awesome. A lot of people talking about Starlink and Elon Musk here. So
yeah, I don't think we've ever had so many comments before in the chat. You broke the record.
Ivan, can I ask one more question?
Yeah, go ahead, Gert.
This, the crypto space here is pretty well like the wild west back of the .coms, I'm thinking. How important is this regulation that the SEC and the U.S. government are trying to put in place here for the volatility of the coins going forward?
The governments can try to regulate this stuff, but first off, it's impossible for them to do it because, like, if you think about it, except under threat of guns pointing at you to stop using it, because, for example, Bitcoin, the whole Bitcoin network, there is no central company running Bitcoin. It is thousands and thousands and thousands of computers all around the world managing the Bitcoin network. And anybody anywhere with a personal wallet, which is just software on your phone or your desktop, can run a transaction. And you can be in the United States, you can be, South America somewhere, doesn't matter. So it's kind of funny that they're trying to regulate stuff. Now, what they can regulate really well is the off-ramps. So if you've got some kind of crypto and you want to turn it into cash, that's where regulation can happen very easily and has happened to quite a bit of a degree here in North America. You'll see. So when you set up an exchange, they want you to prove your identity. That's what the KYC stuff is all about, right? So you have to show that your ID and all that stuff. to set up your account. So they can easily do that. They can't really regulate the other stuff. They can try, but really what's going to happen is they're just going to stifle innovation. So imagine if they decide that all crypto is bad and we're not going to allow it. Well, all the innovation that would happen and all the stuff that I'm talking about tonight that has nothing to do with value transfers of cash, that's about property transfers or leasing agreements, all these different things, they're just stifling innovation. And the SEC in the States is being criticized for this, right? Because they're just bureaucrats. They don't understand the technology. They're trying to use a big hammer that they've used to kind of like regulate the stock and money raising markets. They're trying to use the same hammer and they're trying to do the same thing on crypto. Right. So I don't know if that answers your question. I think they'll have a tough time doing it. And even if they do try to do it, people will find ways around it.
So if they basically, let's say that the one company they're going after, Ripple, let's say they decide and they win the case saying that it's a security. I mean, would that basically, because it's such a case, that's such a precedent, would that basically kind of crash the crypto market? Now everything is a security?
I don't think that's going to be the case. I believe there's been other cases where they've basically just issued them a fine and told them to change their ways and stuff. So I don't think it's going to come to that. It's where you see that there's problems with that, people making their own tokens, like, or I think if I remember right, Ripple had a problem where it's like, there's some central people in the middle that are controlling the whole thing. And they keep a whole bunch of coins, millions and millions of coins for themselves. And then they try to build this network. And so when you see coins like that, especially if there's not a lot of use case behind the coin, you're going to see the SEC and the regulators look at that and say, you're just doing a cash grab. But if there's real utility behind it, where the coins are used in a way during transactions and stuff like that, that's more of a utility type token or crypto. So it's not a clear-cut answer. So sorry, Gert, I was not sure if that really helped with that. I don't think it's going to crash the whole crypto market. Will there be a correction? Maybe it'll just be Ripple. Who knows?
Well, thank you very much, sir. Appreciate it.
Hey, no problem. See a couple other things came in here. It's amazing how much energy it takes to mine Bitcoin. You know what's funny? Elon Musk came out and changed his mind about Bitcoin, accepting it with Tesla, right? Because he's saying, for environmental reasons. But he's still promoting Dogecoin. If you guys know anything about Dogecoin, it actually also mines with electricity. So he's a hypocrite. That's what I mean. Like, I like Elon for the business stuff he does. I don't like what he's doing with crypto. He plays games with crypto. He bought up a whole bunch of this Dogecoin, and then all he does is tweet about it a little bit, and he's made a whole bunch of money off of it. So in my opinion, I can see why regulators fined him a few years ago for doing the same kind of stuff with his stock. I think he talked about it going private or something, or public. I can't remember which it was. Private, I think. And then he changed his mind, and he was slapped with a multi-million-dollar fine. So Elon Musk is not a saint. I'll just say that. Anyways, just a little side rant. Let's see. Which country has the least regulations to track our money? You'll have to do your own digging on that. If you don't want Canada to get its tax, you might have to renounce your citizenship and go somewhere else. Let's see. Yeah, countries try to outlaw. Someone said Turkey was trying to, but they try. They can't. The government, somebody's asking, what do you think would happen to most of the cryptocurrencies if the government made its own coin? In fact, that's already happening. The US Fed coin, they're trying to promote this. Bank of Canada has been experimenting with crypto. In fact, they probably will try to come up with their own coin if the IMF doesn't come up with their own first one and get all the central banks and all the other banks to deal with it, the governments. I don't think it's going to crash it. Anybody who understands crypto realizes that if you're using a government crypto, everything you do is being tracked. Everything. So every little thing you buy, all that stuff. So when you're dealing with Bitcoin and stuff, there's some level of anonymity. And there's other cryptos that are completely anonymous if you really want to be. So last few things here. Why would I exchange my Canadian crypto to BTC, your Canadian crypto? I'm not sure what you mean by that, Andrew. If you are holding a stable coin that's a Canadian dollar stable coin, I don't know, you could hold on to that, but it's not going to go up in value if you're looking to gamble on the price.
Excuse me?
Mm-hmm.
What I mean by that is if the Canadian government makes a coin, my question is, as an everyday consumer, what would make me take coins, which are apparently more secure? That's one of the main advantages of cryptocurrency. If I'm being given it by my employer and translate it into Bitcoin for purchases instead of just using Canadian crypto. That was my question, and why I was wondering what your thoughts on how that would affect it. Would Bitcoin and other cryptocurrencies decline in popularity the moment that, I guess, large organizations, countries create their own cryptocurrency?
It's an interesting question. I don't think it would change the popularity of them. Most of us already deal with money and transfers on a digital basis. It's very common for us, right, to send money, e-transfers. When was the last time you had a big stack of cash sitting, in your hand or in your wallet, right? Most people use credit cards. It's all digital already. So switching to Canadian crypto is really, in my opinion, about the government's trying to track everything you do. And eliminating cash completely. Bitcoin and other cryptos are outside of the system. And if you understand the difference, then you'll want to be outside the system. So hopefully that answers.
I have another question on that if you have enough time.
Sure.
So I don't know much about this because I'm not too big into I haven't dived too deep into crypto.
Mm-hmm.
But I thought I've heard that the US government said they have a way to track Bitcoin. So I was thinking, wouldn't that also get rid of the other advantage?
Bitcoin is semi-anonymous. It's a public ledger. So all the transactions and the addresses are public. And technically it would be possible with enough government resources working at it, dealing with exchanges and getting court orders to be able to figure out who potentially did a transaction. So if you're doing something illegal, they could probably track you down. There are other cryptos that are anonymous. And there are some governments that are banning those particular cryptos because they don't want any anonymity. So hopefully that makes sense.
All right. I guess. Thank you.
Okay. You're welcome.
Hi, Paul. Paul,
Hello,
I just want to say, this man's got an incredible wealth of knowledge here on just about any kind of topic that you can imagine. And I've had the pleasure to be in a couple of Paul's courses, private lending, for example, paying down debt. And all of his presentations are like tonight. He's just got so much information. And I just want to say thank you. And, you just shared a lot of information with us tonight. I'm sure everybody's going to be talking about this for a while. So I just wanted to personally thank you, since we've always conversed by email.
Mm-hmm.
And I wanted to thank you for coming out tonight.
You're very, very welcome. I appreciate the invitation on something so interesting to me. I mean, nobody's asked me to talk about this before, and I thought, what a great topic and combination of asset classes to talk about, because it is going to disrupt this industry in some way. I don't know what long term, but it's coming.
Yeah.
So thank you.
Thank you.
Perfect. Yeah. I mean, we'll respect your time here. You're out east. We'll let you get to bed.
Yeah, it is getting late.
And feel free to put any kind of, I know we have this link here, but any other information you want to share with the group, feel free to put it in the chat. We'll recording of this will be available as well. So it's I obviously there's a lot of interest, and we really appreciate your time. And
You're welcome.
yeah, thanks so much.
You're very welcome. It was great talking to you guys. Maybe someday I'll get up to Edmonton again. It's been a while, but it's a great city. I love it.
Beautiful. Sounds good.
All right.
All
Take
right.
care, everybody. I'm going to drop off and let you guys continue.
Okay. Thanks, Bob.
Take care. Bye-bye.
All right, everybody. That was great. It's such a quite a topic that we could probably talk for hours and hours longer about it, and but there's only so much time. So tune into his video there. He had the link, and follow him. And Lana, if you want to put anything else in the chat that people may want to refer to, do that. And next we will do deals and steals. So this is the opportunity for anybody who has something to share with the group. You have